according to value added method, which is otherwise called product method or net output method, we have to first of all calculate the value of output. Value of output. We are classifying the sectors: primary, secondary, tertiary. After that, we are taking the value of all the final goods and services produced in the economy in an accounting year. Value of output is equal to sales plus change in stock. Sales is price into quantity plus change in stock is closing stock minus opening stock. Value of output. Then we have to deduct intermediate consumption. Intermediate cost. Intermediate cost, it is known as purchase. So, intermediate cost is purchase. Purchase means domestic purchase plus imports. So, if intermediate cost or intermediate consumption is given, there is no need again to add domestic purchase or simply purchase will be given, intermediate cost will be given. Please take care. In the question, either purchase will be given or intermediate cost. But either intermediate cost will be given, then domestic purchase and import will be given. So, we have to understand the concept first. Intermediate consumption means it includes domestic purchase and imports. So, if intermediate consumption or the term purchase, either one will be given, purchase of raw materials is given, intermediate cost will be given or the term purchase of raw materials will be given. We have to take its value. But we have to check in the question, after giving the intermediate consumption or the term purchase of raw materials, again domestic purchase and import is given. There is no need to take its value. And sometimes intermediate consumption won't be given directly. It will be given as purchase from within the country or domestic purchase, then imports. Then you have to add both in order to get the value of intermediate consumption. Now, please take care, it's very important. Purchase of machinery, its value will never be taken as intermediate cost. Whether intermediate cost is given directly or not, whatever it is, sometimes domestic purchase will be given, purchase of raw material, import of raw material, purchase of machinery from maybe within the country, outside. We will never take the cost of the purchase of machinery, which is a capital asset, as intermediate cost. If the purchase of machinery, its value given, never take it for the calculation of value added, because when we say intermediate cost, it is the cost of raw materials, not the fixed capital asset. Okay, so value of intermediate cost, the intermediate good used to produce the final good. So it will be given as domestic purchase and import, or simply instead of intermediate cost, purchase cost sometimes. That term will be used. Okay, likewise sales. Sales is equal to domestic sales plus export. If it is sales, in the given particular, the value sales given, again there is no need to add export value. I have seen it in many question papers. You can check previous year question paper. After giving sales, they will give the value of export sometimes. After giving intermediate consumption, again they will give import in order to check the knowledge. So take care, if sales, the term is given, it includes domestic sales and export. But if domestic sales given and export given, the term sales is not given, then you have to add both in order to get the value of sales. So value of output minus intermediate cost. We get GDP at market price minus depreciation. We get NDP at market price. What is depreciation? Consumption of fixed capital, replacement cost. It is already explained. Then net indirect tax. So kindly take care of the terms. Value of output can be sales plus change in stock, or sales is price into quantity plus closing stock minus opening stock. So by calculating value of output minus intermediate cost, we get GDP at market price minus depreciation, NDP at market price minus net NDP at factor cost of domestic income. To that, we have to add net factor income from abroad in order to get national income. And income from abroad minus income to abroad is NFIA. Income from abroad is to be added. Income to abroad is to be subtracted. I hope that the steps involved in the calculation of value added is clear. We move on to the other numericals in value added method. So measurement of national income by value added method. See the numerical, the particulars given here. Price per unit of output is given in rupees, 25 rupees. Output sold in units, 1000. Its money value 1000. Excise, that means 1000 units is sold. Excise duty 5000 rupees. Depreciation 1000 rupees. Change in stock minus 500. Intermediate cost 7000 rupees. So price per unit of output is 25 rupees and output sold in units is 1000 units. We have to calculate net value added at factor cost from these particulars given. Net value added at factor cost or NDP at factor cost. Net value added. It does not include intermediate cost. Okay, so net value added at factor cost. It does not include depreciation because it is a net concept. It is value added. It does not include intermediate consumption. It is factor cost. It does not include net indirect tax. Okay, so it is otherwise known as NDP at factor cost. That is net domestic product at factor cost or domestic income. So we are going to calculate domestic income. That is after deducting depreciation, intermediate consumption and net indirect taxes. Okay. So net value added at factor cost or NDP at factor cost. It is equal to value of, we have to find out first value added. Value of output minus intermediate consumption. It does not include depreciation. So minus depreciation. It does not include net indirect tax. So net value added at factor cost or NDP at factor cost is equal to value of output minus intermediate consumption minus depreciation minus net indirect tax. because net concept does not include depreciation. Value added or domestic product does not include intermediate consumption. It includes only the value of final goods and services. It is a factor cost. That means it does not include net indirect tax. So if you learn this, it is easy for you to calculate. Any numerical given, any particulars given, you can calculate national income. You can calculate any aggregate of national income. So first is value of output. We have to check whether value of output is given directly. No. Value of output is equal to sales plus change in stock. This I have already explained in the previous class. So sales plus change in stock. How can we calculate sales? So by adding these two, we will get value of output. So what is change in stock? Closing stock minus opening stock. Kindly refer my previous video. I have explained it with an example. So sales is equal to price into quantity. Price of the product into quantity of the product sold. Okay. So sales is equal to price into quantity plus change in stock is closing stock minus opening stock. Now, so value of output is not given directly. Next we are checking whether price into quantity, whether sales is given. No. Change in stock given? It is given as, yes, it is given directly, minus 500. Sometimes closing stock value, opening stock value will be given. So we have to take the difference between the two. So sales is not given, instead price and quantity given. So sales is equal to price into quantity. So what is the price? 25 and here it is 1000. So 25 rupees is the price of the output into quantity sold. 25 into 1000. So sales is equal to 25 into 1000 plus change in stock negative 500. So we are getting value of output. Sales plus change in stock. P into Q. Price into quantity plus change in stock. So 25,000 minus 500. So what is answer? 25,000 minus 500. ₹24,500. That is the value of the output. $24,500 is the value of the output. Now, what is the next step? Net value added at factor cost. We got the value of output, that is 24,500 minus intermediate consumption given. It is given directly, that is 7,000 rupees. Sometimes intermediate cost will not be given directly, instead purchase from the country, from within the country, or domestic purchase will be given, import also will be given. So intermediate consumption, that is purchase of raw materials, it happens within the country, that is domestic purchase, and the firms are importing, that is purchasing from other countries in the form of import. So sometimes domestic purchase and import will be given. By adding both, you will get intermediate cost. Sometimes intermediate cost will be given. Again domestic purchase will be given. There is no need. If this is given directly intermediate cost, then there is no need again to add domestic purchase or import. If the particular term is given, its value is given directly, you can enter that. Okay. So here 24,500, intermediate cost value 7,000. By doing this much, value of output minus intermediate consumption, we will get value added minus depreciation. Yes, given 1,000. So now it has become net value added at market price. By doing this much, we will get net value added at market price. Now minus net indirect tax. Okay. So value of output minus intermediate consumption minus depreciation minus net indirect tax. What is indirect tax? Net indirect tax. Indirect tax minus subsidy. What is indirect tax? The tax levied by the government on goods. It can be GST, goods and service tax, excise duty, customs duty. So here excise duty given. One component of indirect tax is given. Excise duty. No other particulars of indirect tax is given. So 24,500 minus 7,000 minus 1,000, that is depreciation, minus net indirect tax. In that only excise duty given, subsidy is not given. So subsidy is 0. So minus 5,000. Otherwise, as you know how to do the mathematical problems, we can do one thing. 24,500 minus, you can add all these 7,000 plus 1,000 plus 5,000 can be deducted directly. By adding these three, what all are to be subtracted, you can add that and you can deduct it from 24,500, or directly you can subtract it. It is up to you. So 24,500 minus 7,000 minus 1,000 minus 5,000. This I am doing this way in order to understand the method, because value of output minus, from that we have to deduct intermediate consumption minus depreciation minus net indirect tax. Okay. So 24,500 minus, here 7,000 plus 1,000, 8,000 plus 5,000, 13,000. If we are doing separately, 24,500 minus 7,000, we are getting a value, that is GDP at the market price, minus 1,000. That way we can do, or we can total this and can deduct it. ₹11,500. That is NDP at market, and NDP at factor cost, or net value added at factor cost, or domestic income. Next is, from the same data, calculate net value added at market price, or NDP at market price. It is net value added at market price, or NDP at market price. It is net concept. So net concept does not include depreciation. It is value added. That means it does not include intermediate consumption. It is market price. It includes net indirect tax. So net value added at market price, or NDP at market price, is equal to, how do we arrive at value added? Value of output minus intermediate consumption. Value of output minus intermediate consumption, we will get value added. That is sales plus change in stock. Here sales is given as price into quantity plus change in stock What is the value of output? Sales plus change in stock. P into Q, 25,000 plus negative 500 means the value is 24,500 minus intermediate cost 7,000. By doing this much we get GDP at market price. Okay. So price into quantity is sales. Sales plus change in stock we get. Sales plus change in stock we get value of output minus intermediate consumption we get value added. That is gross value added at market price. By doing this much we get GDP at market price or gross value added at market price. We have to calculate net value added at market price. So, gross value added at market price or GDP at market price minus depreciation. We get net value added at market price or NDP at market price. So, 24,500 minus 7,000 we get gross value added at market price. From that we have to deduct depreciation cost. So, 24,500 sales plus change in stock minus 7,000 17,500 rupees is gross value added at market price or GDP at market price minus depreciation, that is 1,000. So 16,500 rupees is net value added at market price. We are not deducting net indirect tax because the question is about net value added at market price. It should include net indirect tax. So, we are not deducting net indirect taxes. So, value of output minus intermediate consumption we get gross value added at market price. Okay. So, sales plus change in stock minus intermediate consumption 24,500, that is sales 25 into 1,000 plus change in stock minus 500, the value is 24,500 minus intermediate cost, that is 7,000. So 17,500 is GDP at market price. From that we have to deduct depreciation, that is 1,000. 16,500 rupees is net value added at market price. From the same data, we are going to calculate gross value added at factor cost. Gross value added at factor cost or GDP at factor cost. Gross domestic product at factor cost or gross value added at factor cost. It is gross concept. So, it includes depreciation. That is the difference. So, how can we calculate gross value added at factor cost? Gross value added at factor cost or GDP at factor cost is equal to, again, value of output minus intermediate consumption. We get value added, that is GDP at market price. Value of output minus intermediate consumption, we get gross value added at market price or GDP at market price minus net indirect tax. we get GDP at factor cost. There is no need to subtract depreciation because the question is about gross value, which includes depreciation. So, value of output minus intermediate consumption. We have done it earlier. Value of output is not given directly. So, we are doing it as value of output as sales plus change in stock. Price into quantity, we get sales plus change in stock minus intermediate consumption minus NIT. Okay. Price into quantity, sales plus change in stock minus intermediate consumption minus NIT. So what is price into quantity? 25,000 minus 500. 24,500 minus intermediate cost 7,000 minus excise duty 5,000. So we are not deducting the value of depreciation. So what is the answer? Here 24,500 minus 12,000. Rupees 12,500. From that, when we deduct depreciation 1,000, we got NDP at factor cost.